Welcome to our latest XAUUSD Analysis report covering the period from September 22 to 27, 2025. In this comprehensive analysis, we'll examine gold's recent price action, technical indicators, and fundamental drivers to provide you with actionable insights for both short-term and medium-term trading horizons. Let's dive into the data and discover what's driving the gold market right now. Looking at the current market overview, gold is trading at $3,759.86, showing resilience with a 0.28% gain over the past day. The precious metal has demonstrated impressive performance across all time frames, with a 1.95% increase over the past 5 days and a remarkable 43.23% gain year-to-date. Key support levels are established at $3,700 and $3,650, while resistance is found at $3,800 and $3,835. The 6-month chart clearly illustrates gold's strong upward trajectory since April. TradingView's technical indicators present a strongly bullish picture for gold, with an overall, strong buy rating. Moving averages are particularly bullish with 13 buy signals against just one sell signal, while oscillators remain neutral. All key moving averages, from the 10-day EMA to the 200-day SMA, are positioned below the current price, confirming the bullish trend. The technical chart shows gold trading in a tight range between $3,720 and $3,760 over the past week, with prices holding well above both the 10-day EMA and 20-day SMA. Forex.com's senior strategist James Stanley highlights that gold has been in a parabolic move since Powell's Jackson Hole speech, with the recent pause being a healthy consolidation. Despite the US dollar rallying and rates pushing higher after the FOMC meeting, gold has maintained most of its gains, showing remarkable resilience. The 4-hour chart reveals a potential bull flag formation with higher low supports, suggesting the possibility of continued upward momentum. Stanley believes gold could potentially reach $4,000 before it's all said and done. DailyForex analyst Christopher Lewis emphasizes gold's strong longer-term uptrend, advising traders to focus exclusively on buying opportunities. He views any dip as a potential entry point, noting that gold has been noisy in recent sessions but appears to be looking for its next catalyst. The analysis identifies key support levels at $3,700, $3,650, and $3,600, with resistance at $3,800 and $3,835, and a potential target of $4,000. Lewis cautions traders against over-leveraging in this market despite the strong bullish bias. Several key fundamental drivers continue to support gold prices. The Federal Reserve's recent rate cut has reduced the opportunity cost of holding non-yielding assets like gold. Despite recent strength in the US dollar, gold has maintained its gains, suggesting a potential decoupling from traditional inverse relationships. Ongoing geopolitical tensions, persistent inflation concerns, and continued central bank buying, particularly from emerging markets seeking to diversify reserves, provide underlying support for prices. These factors collectively contribute to gold's bullish outlook. The short-term outlook for gold shows a consolidation phase after its recent rally, with limited pullback suggesting underlying strength. Support is likely around $3,700, with potential for a move back toward recent highs near $3,800. For the medium term, the outlook remains bullish, with technical indicators supporting continued upside. A successful break above $3,800 could accelerate gains toward $4,000, supported by favorable monetary policy, geopolitical uncertainties, and seasonal factors typically positive for gold in Q4. Our projection chart shows 3 scenarios, with the base case targeting $3,900 by December. For short-term traders looking at the 1 to 2 week horizon, we recommend buying opportunities on dips toward the $3,700 support level. Consider entries in the $3,700 to $3,720 zone, with stops below $3,650 and targets in the $3,800 to $3,835 range. This carries a medium risk level. For medium-term positioning over 1 to 3 months, maintain a bullish bias and focus on buying deeper pullbacks to the $3,650 to $3,700 zone, with stops below $3,600 and targets in the $3,900 to $4,000 range. Remember to practice sound risk management by limiting position sizes and using appropriate stop losses.